And welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald, on this frosty Monday. I hope you all had a great weekend and I hope you're all ready for this trading week. Now, before we jump ahead into my portfolio, as always, let's get the usual disclaimer out of the way first. Everything that I share in today's live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, all the tools that I'm using during this live stream / video, so the charting software, the broker, the strategy I'm following, and so on, are all linked in the video description down below. And the one thing I truly recommend, if you haven't done so, is check out the Elliott Wave principle, which you can read online for free when you're using the link in the description down below. With all of that said, let's take a look at my portfolio. We see we again have a slightly break-even start into the day, or in this case, week, with a touch red, but nothing major. Hi, Olga, great to have you here. Also nice to discuss things with you on Discord outside of the streams. Even though we might not agree on everything, but still pleasant or nice to have somebody to discuss certain things, yeah. Overall, nothing changed in my portfolio, so we still have the 600 GameStop calls, we still have the 6 covered calls that expire in January, which brings up, Olga, did you decide already if you want to write some covered calls against your holdings, or are you still deciding to just hold them so you don't miss out on an upward move? And we have the grab call here. We have positions in Barnes & Noble Education Inc., NEO, Immersion Course. All the other positions are either small or already in quotes abandoned. Deciding to back hold. Yeah. I don't think it's back holding. I believe it will go up. Anyway, let's jump into it. And we actually today start on the crypto side. So as I shared on Discord already, I sold my XYO holdings at 0.01395. So to me, it looks like we have the following pattern: 1, 2, 3, 4, and are currently here in our process of finishing wave 5. However, in that 5th wave, we likely also only have wave 1. I have to adjust that extension. Nope, that's the wrong one, not this one. That one actually goes here, and then we need a new extension. Now, looking at this again, to be fair, so looking at this again, I actually might have been a little bit too early with selling, although, I mean, sold them at a profit, so not that it matters too much. Considering that we have the expansion from down here for this wave 1, 2, and potential wave 3, and we hit the 361.8 target, which would mark a perfect point for basically 1, 2, 3. However, if let's add Kennedy channeling technique. So then we have here 1, 2, 3, 4, and 5. And if we use Kennedy channeling technique, we would pick point 4, point 2, and a parallel through point 3. We would expect to hit the median or the top of this channel, which might not be possible considering how steep it is. Yeah. Let's try. Wait, what? Wave 2? No, wave 2, 3, yeah, like this, okay, which might be possible if we are not, yeah. So, circling back, so based on this, and logarithmic again, and back with away with the channel. So based on this wave 1, wave 2, wave 3, we would expect to hit the, which we already hit, 361.8, or potentially a higher level, which I don't have on the chart here anymore, so... template, extension, and then like this for now. So we also bounce on the 2618. Could that be 1, 2, 3, 4? Okay. Did I miscount here? I mean, doesn't matter. Nobody ever got broke by taking profits. What do I need then? Then I need this high, and I need this high, and then I need a parallel through here, and then we actually would have 1, 2, 3, 4. I might have actually miscounted here, yeah. So yeah, let's remove some things here and take this from the top. Reset So if we have an impulse, so first of all, we assume that we have here wave 1, 2, and then potentially wave 3, and about wave 4, I'm just going to label it right now, but let's move that away. So if we now add an extension here for our wave 1, 2, we get our usual profit targets, and we technically turn around at the 2618. So we're going to remove the lower ones for now and keep the 2618 here on the chart. Yeah. Now, if we use Kennedy channeling technique, then we would have our so-called base channel that would go like this. And then we would have our so-called acceleration channel where we take our point 1 and we take whichever high point we have and a parallel through point 2. So back in November 19, it would look like this, and we would wait for a breakout to the bottom, which doesn't happen. So as the chart moves on, we adapt and adapt and adapt until we actually have this point here. And when we have a breakout to the bottom, we assume that we're in wave 4. And then we have a deceleration trend line that would look like this. Looks like I might have really mislabeled this one, yeah. And the moment we have a breakout here, we can start to look towards assuming that we're in the 5th wave, which gives us our destination channel, which would look like this, where we would then assume that if we take 0.4, so right now, based on Kennedy channeling technique, we would assume that we have this here, and 0.4, 0.2, and a parallel through 0.1, 0.3, sorry. And then we would expect to reach the median. So let's remove this here, the median or the top of this channel, which is very, very unlikely. Now, it's possible that wave 4 didn't finish here, but might be a combination that has its orthodox, wait, 0.4, come here, 0.4, this one, parallel through, and 0.2. So I deleted the wrong channel, but it's okay. So, okay, that's my issue here. See it? Never mind. So 0.4, 0.2, there we go. So like this, that's the channel we're talking about. It's possible that the orthodox end of the channel would be, for example, here, if this is some form of combinative correction, yeah. But right now we assume it's here. Let's triple check a few things. So hi Akashi, great to have you here as well. So let's triple check a few things. First of all, if this is our wave 1 and wave 2, then here we retrace 61.8%, which means we would, by rule of alternation, expect that our wave 4 actually retraces 38.2. So we can remove the levels that we don't need here, so we don't clutter the chart too much. And which means we would expect that this here retraces 38.2, and we actually retrace 50. Okay, that's also still acceptable. 50, so 38.2 can stay on the chart just to show us that we're off a little bit. And then the question would therefore be, where is wave 5? So in my original assumption, I thought that we are actually going for this wave 3 target. So that's why I had my exit here, which wasn't bad, although it's possible that, again, I was too early and there's more room to come. So yeah. Now, based on Kennedy channeling technique, we are now in the 5th wave. And if we use more of our usual tools, if that is our wave 4 end, wave 3, wave 2, then we would now also, we already reached the minimum target for wave 5, and we are still below the, in quotes, maximum target for wave 5 that we only rarely exceed if that labeling is correct. Yeah. Where could it have gone wrong? Okay, so based on this, we would assume that wave 3, wave 4, and the question is where wave 5 goes. However, then in that move here, we would have to consider that wave 5 should also subdivide into 5 waves, which could be 1, 2, 1, 2. So we would right now be looking at, yeah, that might actually be the case. So 1, 2. So we right now here be looking at 1, 2, 3, 4, and then 5. And that would, however, then only be, since either the correction goes till here, then that would be the entire move, which would check out nicer because it would mean that we are actively staying within our targets. So it would probably play out something like this. But that again would require the following. So it would require that wave 4 actually, wave 4 actually terminates here. No, that's, what did I move now? Now I moved the expansion. Okay, then wave 4 terminates here. And if I manage to grab wave 4, which seems to be there, so wave 4 would end here, and then just have to, yeah. So that's how it could look like. So basically we have wave 1, wave 2, wave 3, wave 4 somehow being a combination that ends here, and then we have wave 1, wave 2, wave 3 that nicely bounce at the, so we can remove the lower levels already at the 2618, where we no, I took my profit based on this one here. So here we can also remove everything that's higher. We're gonna make an alternate chart to see what would be the alternative. So wave 1, wave 2, wave 3, wave 4 based on Kennedy channeling technique, all the way 4 based on Kennedy channeling technique, potentially here, almost reaching the top of the base channel. Very often wave 4 will touch that top, so that's not too bad. And then we would be in wave 5, and wave 5 theoretically based on Kennedy channeling technique, we would also have to adjust it, and here accordingly should touch the median or the top of that channel. Now the top is obviously would require quite some push upwards, but the median is not out of the question, especially if we consider that in the 5th wave we're not done yet, but we would have wave 1, wave 2, wave 3, which means we would expect not expansion, but retracement. And also retracement gets cluttered really quick, yeah. So let's remove that, or move that to the side for now, yeah. So here we are retracing almost 78, or actually 61.8, since the candle doesn't close outside. So apply. So here we have our wave 1 and then our wave 2 that retraces 61.8%. And then we have our wave 3 that we believe might be 1, 2, 3, 4, 5. So, and is finished here. And then that 3rd wave should retrace 38.2%. Now, right now, all the options are still open. If it retraces 38.2%, then basically our expansion from this level would look like this. And our minimum target would still be slightly below what we expect as the maximum target based on the bigger 3, 4, 5, yeah. Which means I personally will enter or add a re-entry at 0.01175. Not amount, limit price, XYO, yeah, 0.01175 for pretty much that should be that. And so 0.01175. So I'm going to make a re-entry order here because I believe the correction would take us down here. And then we should get the next push. And I would then take my profit basically here at, so depending on which point we touch here, but I would then take my profit basically here at the 100% mark. We could go a little bit higher, but that would still point towards an almost 70% profit over the next couple of weeks. If I'm right. If I'm wrong, we will see that in the alternative labeling, we might have finished the 5 waves and we'll actually go down here, which would bring a 30%, 40% risk before we might see the next pattern upwards. Yeah, so, but yeah, place my order. There we go. And that's that. So with that, we have one potential labeling, which would be as said that things are moving like this. So yeah, our correction, that one shouldn't take too long, and then which means that also shouldn't take too long. We might fall short of touching the median here, yeah, but which means we would expect it. I'm also going to remove the other levels right now, so it's not too cluttered, so just the one we expect. So I said we would expect the retracement down here, and then that's the target area based on the bigger expansion. And then that's the target area if we indeed retrace pretty much exactly down here, where we can see we have a very, very narrow area of overlap between the minimum target that this 345 gives us and the, in quotes, maximum target that the bigger 345 gives us. So Kennedy channeling technique applied on the XYO token would look like this: wave 1, wave 2, wave 3, wave 4, and we're currently in wave 5. And that fifth wave, unless it is miraculously some kind of diagonal, which the visual aspect doesn't support the idea, in my opinion, should only be subdivided so far into wave 1, wave 2, wave 3, now wave 4. That should retrace 38.2% based on rule of alternation. And then wave 5 upwards should take us into the area of 1.6 or almost 1.7 cents. Before we then will correct the entire movement and again retrace down a little bit. Yeah, visually. So I'm gonna just hide, or what do I need to hide here? So yeah, like, okay, I cannot show you that. There's just some information I don't want to share. Unless, can I pop that out? No pop out, just bigger, yeah. But if we're actually going to save that, and then we're going to go with the alternative labeling that assumes that we already have 1, 2, 3, 4, and that is just wave 5. No, that's already what we have. That we have 1, 2, 3 not finished, 4 and 5. Yeah. And to do that, what do we have here? Here we have a 5-minute chart. If we look on the 5-minute chart, we can see visually this here happening right now, although it might be wrong, but we can see that it also, so here we say we point towards a re-entry at 1175, and here we can see that we actually get a 100% target at 1156. Yeah, so 5-minute chart would suggest that this correction here, unless it's a bigger correction, and this would be 1, 2, 3, 4, 5, yeah, A, B, C, and then another 5 waves. But just based on the bigger pattern, it currently would point towards this being A, B, and C. C 100% target being roughly in the area where the 4-hour chart would put our 38.2 retracement, which we would expect based on the rule of alternation. So that said, let's also use the 4-hour chart here. So same chart, and the other labeling would be as said that we have wave 1, wave 2, wave 3 not finished, and we get wave 4 and wave 5. Now, if we again, first we add our base channel. Then we add our acceleration channel. So our assumption now would be that the breakout that we had here doesn't count, yeah, which kind of like violates Kennedy channeling technique. So, and we would have to move it like this. And yeah, and then if we get a breakout here, it would be wave 4. So maybe we can throw Kennedy channeling technique out the door for this right now. So, which means we would now assume that basically the hitting of the 261.8 extension, which is the most common wave 3 target that we experience, just gets ignored, and we actually would count the 361.8 as our target. So we would get rid of all those levels here, that one not, and we can also already get rid of the future levels for now. Actually, the future levels can stay because they're anyway not on the screen. So we would assume that it's like this. And that might be our wave 3 target. However, we would have maybe a hard time labeling this. We can say, do your magic, decompose one level. So, and then if I now here say decompose one level, it probably will have, yeah, it would label it like this: 1, 2, 3, or 1, 2, 3, 4, 5. Might be possible. I'm not saying that it's not possible. Although that would need to be a truncated fifth wave in that 1, 2. So in that move here, or let's. Yeah, so from here to here, that would be 1, 2, 3, 4, and 5 in a weird way with a truncated fifth wave. Like, not sure that checks out on so many levels, yeah. But if that were the case, we would right now be retracing this move. And we would expect a bigger retracement because our minimum target, our usual minimum target, would already be a little lower, so below 1 cent. So not by much. So we basically go from what did we say? 1175. So from here, yeah, I mean, it's still by much on the chart, yeah, down to here. And however, visually, again, the problem here would be that this fifth wave here would also need to subdivide into 5 waves. And if we, no matter if we say it starts here or it starts here, if we apply Kennedy channeling technique, it would look like we only had wave 3 now, should still get wave 4 and get wave 5, which means that the labeling we have here is, in my opinion, the more accurate one, and would mean that here we can get rid of the extra levels. Would mean that we are looking as this. So we have wave 1, wave 2, wave 3, wave 4, and then in wave 5 we have 1, 2, 3. Right now wave 4 is developing, and then we get wave 5, and we then terminate around 0.017 dollars or USDC, so US dollar C or Coinbase or whatever the shortcut is. I forget the name all the time. For this, yeah. It's going to be interesting to see if that will play out like this. So if I get to re-enter here, and if I then get to exit here to make a, I don't know, almost 70, or let's say, yeah, a little bit between 50 and 70%. Or if it turns out I'm wrong, we just rally up further and I miss out on extra profits. Or if it turns out I'm wrong and we rally down further, and I basically give up the profits that I gained up here. Where did we get out? At 1395. So here, 1395, yeah, somewhere here, actually close to the top. So really, really good exit in my opinion. Yeah. If we would have used this labeling, we would have had a point landing or not. Almost. So we see that the 2618 extension would have given us the target area of 1467, and we reached 1475. So it would have been really an almost spot landing if I would have bothered to double check my labeling. But even the way it is, I think it was not too bad. Yeah. So that about XYO. I know it took a little bit longer to cover this, but I think it's right now in a decent spot in the pattern. And yeah, so I think there's more room upwards to come, and we leave it at that. Now moving on, our usual suspect GameStop. Here we actually, I mean, right now we're not keeping track of predictions in crypto. Yeah, we might actually add that real quick. So I wonder, it's too fast paced. Yeah, so because that should already happen today. So you don't have to write down the XYO prediction. So I will do my best to remember it until tomorrow, and probably by tomorrow or Wednesday we should already see this play out, unless we get a very, very drawn out fourth wave. But considering that wave 2 here is drawn out, wave 4 should actually happen and play out faster. Anyway, so circling back to GameStop, where we again, visually that's quite nice here. So while last week we considered the possibility that we might go higher here into the area of 33.82, 34.46, visually we have here now only the beginning of a correction, as in the form of 1, 2, 3, maybe finished 4 and then 5, and then we get A, B, C, and then we get another 5 waves down, confirming more or less that we are indeed now, where do you come from? Where's the 100% mark? 100 here, 0% mark is here. Yeah, so confirming, we'll keep the 0 on the chart for now as well, so I know where it's coming from. Confirming more or less our labeling that we have wave 1, wave 2, wave 3 that terminates at the 561.8 and does not reach these 600 levels that we considered possible before, and are now in wave 4. We will only have confirmation once we break the deceleration channel, so once we break the bottom here. But visually, if we go, we're gonna jump on a 4-hour chart, or maybe even an hourly chart for a second. Yeah, visually it appears that we have basically the following here now: wave 1, wave 2, wave 3 in progress, and then here in that wave 3, wrong one, this shortcut, in that wave 3 we have potentially wave 1, wave 2, wave 3, wave 4, and we're getting now wave 5. Now, if we use our usual tools, we can do the following as always. We can add an extension here. And we turn around. I know that's wave 3, then maybe not even. Yeah. So we don't turn around nicely at the 3618, but I'm going to count it as. I know wave 3 likely not finished yet. Sorry. Let's move that on for a second. Because then in here, now it's going to get a little bit cluttered, but I don't want to move this. I want to move the extension. So in here, we would have a very, very small 1, 2, 3, 4, 5. So yeah, it's getting a little cluttered here. It's possible that we have 1, 2, 3, 4, 5, and that is actually already this pink wave 3. But it's also possible that we only have 1, 2, 3, 4, or 4 till here, and that we're still getting wave 5, so that 3 isn't finished here. Yeah, so in which case we would expect, so that we would need to add an expansion. We would need to, let's check this. If this is 3 and 4, we hit the minimum target, so set that's possible. And the other option is like this, and in which case wave 5 should take us down to 2788. Considering this might be A, B, C for the wave 4, so 1, 2, 3, 4, and then wave 5 should take us down to 7788, 2788. Then we would have here wave 3, wave 4, and then we would get another wave 5. So like while we cannot be 100% certain if we already finished wave 3 here or if wave 3 will be here, it looks like we are getting, like we're here, or we can actually, we can double check what we would expect based on the bigger pattern. If this is already wave 3 finished, we would assume that it would be like this. And it's, no, that's the other wave 3. So sometimes it gets a little bit confusing. Then we would assume that 1, 2, 3, 4, and 5. Okay, then we would expect that we go down here or down here, which falls short. If, however, wave 3 is not finished yet, so we basically still have to finish this move, which we set at 2788. And then depending on how far we go up in wave 4, we would actually get a nice overlap in the target area that we expect for this red wave. Yeah, so based on the 1 hour chart, I believe that this is basically wave 1, wave 2, and wave 3 down in progress. And that third wave now subdivides into, on one hand, 1, 2, 3 not finished, 4, 5. Yeah, so that's, but we're gonna zoom out again. We were on the 8 hour chart, so I just have to delete the small stuff. Actually, let's zoom in again so I can delete the wave labeling as well. And we can keep for now, 8 hour chart, yeah. So right now, as said, assume that we have 1, 2, 3 potentially not finished, and 3 should in that case take us down to here, 2614, 2663. 4, 5 might touch the 50% retracement, and then we get a wave B, and then we get a wave C down, and then we're actually looking at a retracement down into the area of the 61.8 retracement at 2423. Yeah? And however, rule of alternation doesn't apply here, or doesn't seem to fit, because we almost retraced 100% here, wave 1, wave 2. So cannot rely on rule of alternation to point us any further. And as I pointed out earlier, based on Kennedy channeling technique, we still have to wait for a break of this channel to the bottom to have our confirmation, our extra confirmation, because visually this is not a 3-wave corrective move, because that third wave is too strong. So this has to be 1, 2, 3, 4, or 3 as said, not finished yet. But if 3 is not finished, we just go a little bit lower, 4, and then wave 5. And corrective patterns always subdivide into 3s, which means it would then be A, B, and C, and which means I right now expect that we retrace either to, most likely I think 61.8, but again, it would play out as A, B, and C. So there would be not one push down to 61.8, but one move, a little bit upwards move, and then another move down. Yeah, I think that's the most likely scenario right now, which plays in our favor because we are having $30 covered calls, so that expire in January here, And if we stay below 30, which would be basically wave 1 or wave A, actually ideally 1, 2, 3, 4, 5. So wave A, wave B recovers a little bit, and wave C downwards, which means by the end of the year we might be at 24, 23. So the timing part is a little bit hard to estimate. Yeah, so don't nail me down on the timing. And then we would get our wave 5, so the big orange wave 5. And that would then, depending on how fast that plays out, we might, by the time my options expire, still be below 30. Or I might be able, if I'm right and this plays out like this, I might be able to close them for, I don't know, 80% of the premium or so. So if we touch this point here, I definitely would buy them back and realize whatever profit from I can. Because after that, I expect that we move up further, which means it would make my options less valuable, and bring the risk of having the shares called away. But visually, as I said, right now we are in a 5-wave move downward. So while we might have finished the 3rd wave here and get a little bit of a recovery, I still expect a 5th wave push. And more likely, based on the hourly chart, we are only looking at wave 1, wave 2, wave 3 not finished yet, which means we would expect to hit the $26 area here for wave 3. And then wave 4, wave 5, likely target 50% retracement. Then we get a 3-wave recovery move that does not make a new high, so that just recovers a little bit of what was lost. And then we get another 5-wave push down, likely target, in my opinion, 61.8 retracement. Yeah. So I think that's what we're looking at over the next couple of weeks, which means that even right now, don't forget time decay in your favor. Yeah. But I think that I actually might benefit from two things. On one hand, the time decay, and on the other hand, the decay in implied volatility. That might, but it's tricky to say, you know. So the time decay, if we get a little bit of an upward move or so, or if the volatility increases too much, then whatever I have in time decay, the options might still be pricey. Yeah? So especially as long as we are in the area where it's really, really close to 30. But honestly, I would only buy them back if we touch the 61.8 retracement. Yeah, if we don't touch that, then I'll just let it play out. If I have the shares called away, then so be it. And I just sell cash secured puts again. But unless something changes on the chart. Yeah? I mean, right now, again, we don't have a confirmed pattern confirmed by Kennedy channeling technique because we're still waiting for the breakout of the acceleration channel. But this really looks like 1, 2, 3, 4, 5. And so it can only be part of a correction, in my opinion, which means there has to be a breakout to the bottom of this channel. Yeah? Earnings are going to be on the 10th, so we can actually, I think, probably after market. Yeah, I didn't write it down, but let's say after market. So that's going to be when we have earnings. 10th at, now come on, let's put it at 11, since I cannot pick 10 p.m., which would point towards 1, 2, 3, again, 4, 5. So, and then maybe the earnings, maybe depending on how fast we move down here, maybe the earnings are the catalyst that create the wave B move. And after that, we see again a slow decline. And then from here, I expect it to go further up. Yeah. But yeah, it's going to be, that's actually one of the, in quotes, ups and downsides of the option of options or writing options. You have multiple ways how your options can become profitable, but the same multiple ways can also make them. I mean, with writing options, it's not so much an issue, especially if it's covered calls or so, because you anyway collect the premium. It's just about potentially missing out profit or having to hold shares as they become worthless. Yeah, if we're talking about, but with GameStop, with my bullish outlook overall, like, I lost my train of thought. So my point was actually that all the Greeks that can play in your favor can usually also screw your position. So when you think you should be in profit already, but then whatever, implied volatility increases, and so the options become more expensive again, and so you're not in profit because of that, or price moves and suddenly you're not in profit anymore, or yeah, so it can go both ways. Yeah. So, but still, I think we did quite well, although I sold those covered calls a little too early. I think we sold them at the top here because I thought we might already be done with the move. And could have made $1,000 more in premium if I would have, I mean, still profit is profit. So instead of $2,800 for around 40 days, it would have been $3,800 if I would have caught this scenario. And yeah, so, but yeah, we'll have to see how it plays out. Again, right now, this week, I expect that, well, we might see a wave 4 recovery. I still believe that there is a push down due. And again, basically, that we're going to look at something like this, let's say, yeah, actually, so more like this, yeah, roughly. So obviously might not have to retrace that far back up and so on, and might happen faster, might be dragged out longer, whatnot, but I think that's going to be what we're going to see in the next couple of weeks. Yeah, with that, we spent quite a lot of time already on XYO and on GameStop. Now checking what's XYO doing. So might I be proven wrong and we'll get another push up? Yeah, I mean, we'll see later. Moving on, BNet, Barnes & Noble Education Inc. So slowly inching upwards. Not sure about this labeling here because the retracement here is very, very strong. Would need to be a diagonal for this to be 1, 2, 3, 4, and 5. But if it were diagonal, if my overall labeling is correct, then we would be here in wave 1, wave 2, and wave 3. And wave 3 always has to be an impulse, which means if this is a diagonal, it could only be the first wave of the 5 waves that make up the impulse for wave 3. There's still the possibility that this turns into ABC, ABC, ABC. And after that, we go up. Overall, we caught the turnarounds quite nicely here at 845 and then here at around 880, a little bit above that. I don't know. We got at 911. 911 is our position where we entered. So here, yeah. Didn't take any profit so far. Our average, because we also got it wrong. I also got it wrong initially somewhere here. Our average is a little higher at 10 something. I'm just gonna hold. We don't have a big position, but I'm just gonna hold. I believe that we, as said, are to see way more upside here. Immersion, what are you doing? No news so far. So we're waiting for a strong break to the upside or a break to the bottom to confirm we're right or wrong. Cost probably still within our, so we're just waiting for whatever this is to play out and either break this top here at 879 or this one here at 652, that low here at 652. I believe it will play out in some form as upwards move. There is the possibility that I completely misread the situation and this is a 3-wave corrective move and this is our basically 1, 2, 3, 4, 5, so downwards. We'll see how that plays out, but our position is also not that big, so yeah. NEO, now we touched, did we touch 428? Yes, we touched the minimum target for the 5th wave push that we considered possible. Doesn't mean that there is not a little bit more of a movement down, but this is likely. So which also happens to be the 78.6 retracement. So we might have just entered a little bit too early. But back then I also pointed out that it looks like we're still missing. So 1, 2, 3, that we're still missing 4 and 5. So it could have been 1, 2, 3, 4, 5, but visually I pointed out that it looks like we only have 3 waves now. And again, even if this is 1, 2, 3, 4, and 5, there is the possibility that 5 hasn't finished yet. Stop loss for long positions would need to be at 368. So yeah, risk reward ratio is not too bad because if we have the turnaround point here, we would expect to go up somewhere here. So have more than 100% return over the next couple of months. And Novavax, what you're doing, moving a little bit sideways. We're actually in this channel right now visually, so not that it matters from an Elliott Wave perspective to me right now, but visually it appears to be that we are in this channel, so here. And we need a breakout from that channel to kind of confirm that we finished 1, 2, 3, 4, and 5, and are now, which make up the bigger A, B, C correction. My options that expire in January will likely expire worthless unless we get a very strong move. We'll see how that plays out. And what else do we have? We still haven't labeled SPY, SPX, or NASDAQ. So we have our usual suspects. DJT, again, I'm bullish, but I don't have a horse in the race. So I think we have our free wave corrective move, almost on the spot, 100% move for wave C, with a nice free wave, wave B, which would make this wave 1, wave 2, 1, 2, 3, 4, 5 for the next one, 1, and then 2, and then we would actually get strong upwards movement that are, yeah, like we're also looking about profit targets that are north of 100% return. I think the company is hugely overvalued, but yeah, I mean, that's what the pattern suggests. We had Throw, where we talked about, they actually made the short about the target areas for before they reported their earnings, and then the earnings turned out the way I expected them. We actually now hit the first target area already, so 1614, and now on our way to our second target area that also will exceed any profit targets for this being wave A, B, C. So we actually will have to start looking at the possibility that this turns into or is wave 1, now come on, wave 2, and wave 3. Which would have the target at 13 something, then we get wave 4 and then wave 5. Yeah. So yeah, quite some downside here. We had RTX, where we considered as a gamble, in quotes, when we were at 68. We could enter with the stop loss here, but where I pointed out visually it appears that we still have to get a push down. Yeah, that push down now is in progress, and visually we have 1, 2, 3 maybe not finished, 4, 5. So there's still a little bit more downside. Based on what we have on the chart, we should potentially finish this move somewhere above 52 or 51.89, or somewhere above 54 actually. So based on the bigger pattern, if that is a big A, B, and C. So yeah, so might not be worth selling yet, considering that we have the 78.6 retracement here as well. Yeah, might be worth entering at 57.89, but then the stop loss would need to be somewhere way further away. So, but if you have your position right now, then probably worth just holding. I mean, we look at like what, a 10% drop till here potentially that hits both the target areas as a potential turnaround point. If we break below 57.89, so not just briefly where the candle, I mean, I'm looking at a weekly chart, so it's kind of like you would need to within a week dip lower and recover above it. That's fine. If we close the weekly candle below 78.6, so below the 78.6 retracement, I would probably cut my losses. SMCI appears to get another push. We're in the target area for, actually thought we might have finished here since we hit the minimum target and be on the next wave down, but looks like there's still a little bit room up. One would need to try to label those potential 5 waves to get the exact target area. And then from there, I expect another 5 waves down as mentioned earlier. Tesla, we haven't labeled in ages, so we're not going to start now. I don't know where I have Vero on the chart, probably looked because of their earnings. Yes. Visually tricky might be, what's the low here? Low here 36.12 and here 37.51. So that would need to be like this. And however, then visually this would be 1, 2, 3, 4, and maybe wave 5. And then we would retrace actually this here. And then that would be wave A down, wave B. And then we still would be, we would be in the target area. Correction could be over here. So otherwise, this would need to be 1, 2, 3. Okay, no prediction for me for Vero. It's like not clear enough. So I don't see a clear picture here. We could zoom out and zoom in to try to find one, but yeah, not worth it. Then we have Scalar, where I actually expect visually, based on the weekly chart, that we are looking at a big wave. Could it be 1, 2, 3, 4, 5? A, B, C, 1, 2, 3, 4, 5. Okay. Also no prediction from me here because we also have the option that this is a 3-wave move and not a 5-wave move. So, and if that's a 3-wave move, then we would have correction finished and would be in the next 1, 2, 3 upward. So although then there's still the possibility that that correction here isn't finished. So my gut feeling would suggest that this here is basically correction not finished and we get a push down, but I'm not gonna say that's my prediction. It's just my gut feeling. And then we have our usual suspects. in FANG. Amazon, what you're doing? Yeah, there we are closely moving towards the target area that we have here on the chart for already quite some time. Apple, we don't have labeled as far as I recall. So, but if we look at this, it's an 8-hour chart. Okay, I'm not going to say anything. So, I think we have, do we have Netflix labeling on the chart? There we are actually within our target area. So one should label here moving forward from the 1st of August, this 1, 2, potential 3, 4, 5 to time potential exit. Psychologically, taking profit at the $1,000 mark might make sense. So that might be where this wave terminates. And Meta, we don't have labeling. Yeah. And yeah, I think that's it. So the interesting things or relevant things for me are going to be, as usual, GameStop, where we right now have, as said, our, yeah, we're not going to chart. So GameStop, where we right now are expecting a break of this acceleration channel, which then would give us a deceleration trend line that would look like this, not horizontal, yeah, but trend line. That would look like this. So we would expect 1, 2, 3, 4, 5. And then once we have a break here to the top, we might be in the 5th wave already. Yeah, that deceleration trend line, if it holds, then it would also mean that our correction would need to basically finish before the 18th of December. Yeah, so which is, yeah, might not be ideal for me. Let's see how it plays out. But yeah, that's what we are looking right now. I said expected break of the deceleration channel, correction down to potentially 24, 23. And the other thing that's relevant for me right now, although my exposure there is not as big, would be XYO, where visually our primary analysis would suggest that we're currently getting this 4th wave, and then we're getting a 5th wave up into the area at 1.697, 1.712 cents. If we zoom in here drastically, I fell a little bit short here. So did we go lower here? That's 1220, and that's also 1220. Okay, so 5-minute chart's going to be hard to label. Although the 5-minute chart, just looking at this part, would also suggest that there's now one more push to come a little bit higher. That would then basically move our wave 3 point. We were on an 8-hour chart or 4-hour chart. We were 4-hour, I think. Yeah, 4-hour makes more sense. If we 15-minute chart, what would that 15-minute chart suggest? 1, 2, 3, 4, but 5 not finished. 1, 2, 3, 4. So there's a little bit more room up. Circling back, 4-hour chart. So we might get a small spike through the 1467 still, which then forces us to move the wave 3 point a little bit. And then also forces us to adjust the retracement level, which means we might not retrace to 1175, but a little bit higher than that. Yeah, or I might be proven wrong. Anyway, those are the things I'll keep an eye out in the next couple of days. Fossil is one of those positions. For example, today I noticed a move, but I don't see 1 to 5% moves. Dollar Fossil, that we don't have on the chart. So let's see what we get here. Yeah, I really wish I would have, or I would be able to dedicate more time towards the trading. I assume that if or when, oh, that's an insane nicely move, yeah. If or when I break the 6-digit in the portfolio, so when we're talking about managing 100,000 or more, maybe even earlier, maybe already at 30 or at 50,000, because my returns are good enough that then the monthly return justifies dedicating the time. But until then, even at an 80% yearly return, it's not worth spending much more time managing the portfolio. So yeah, do we get an 8-hour chart? Is my coffee empty? No, coffee is not empty yet. So 8-hour is also not clear enough. So we still have some candles that don't contribute to the pattern. I built these portfolios over a year ago. There, so 12-hour chart. I mean, obviously, or actually, we would need to go on a lower time or a bigger time frame. But so without looking at the historical development, we can see down here that we have 1, 2, 3, 4, 5 quite clearly with the naked eye. And yeah, once that loading stops and I can scroll in the right direction again. Now, come on. Yeah. If there's one thing I would have the time to dig into and would know a solution for, it would be the loading times of the charts, which just doesn't make sense to me that it takes so long to load a couple hundred candles, considering that you grab like, I don't know, 6 values. So high, low, open, close, volume, not even the range, but the rest is calculated based on those values. So 5 values, yeah. But yeah, so will it not? If it doesn't, we'll jump into the alternate where it doesn't show anything for now. Okay. But my point being is so that either this is wave 1, wave 2, and we're now getting strong wave 3 moves. So without seeing the weekly and monthly charts, or this is just a correction before we go further down, in which case this would be A, B, and C. So we could, yeah, if the chart doesn't finish loading before I'm talking, and we'll just have this in theory. But if it's 1, 2, 3, we could, as always, add an expansion, which I cannot drag here right now. Yeah, so basically, if it's ABC, so we use the expansion starting point here, here, and then the low, and we get the 61.8 and 100% levels at the target areas for this wave C move, where we then should consider taking profit, or at least start to implement a trailing stop loss or so. And if it's indeed the bottom of some downward move, then this would be wave 1, wave 2, and we could add an extension for wave 1 and get then our usual 261.8 target area for wave 3. Yeah, so yeah, doesn't seem to finish loading, so we're gonna call it a day here. Thanks, Olga, for stopping by and for sharing a few things as always. Yeah, thanks Rai, thanks Akashi, thanks everyone else that lurked in between. As said, we're gonna keep an eye on GameStop, how that plays out, and in my case also XYO at the moment on the side. And did XYO make today 50%? Oh yeah, seems like it did. Yeah, crazy. Yeah, so I didn't notice that I actually had such a nice return just today on that position. Yeah. Anyway, so everyone else, have a great rest of the day, and then see you all tomorrow for another episode of Daily Market Mastery around 5 minutes before the Nasdaq opens. Till then, bye bye.